Story number 5. We are going to go to John. John, we're going to you with this story. Story number 5 is coming out of the Business Observer newspaper. I read the headline for a couple graphs, and I want you to comment. Again, a hurricane has just hit the state of Florida last week. We discussed it during the recording of our previous podcast, that we were going to sort of get into it a little bit this week. But basically, hurricanes just hit. Last year, there was a serious hurricane. Prior to that, we had the collapse of this condo tower in Surfside, which is on the Barrier Island in Miami-Dade County. So we've had a lot of issues recently related to insurance. So that's the backdrop, Mr. Gruss. Before I read the headline in the first couple graphs, and I want you to comment. Headline: as property premiums rise, should state-run Citizens be charging more? Subhead: there's a school of thought that says Citizens Property Insurance Corporation, which is the insurer of last resort, it's a state entity. There's a school of thought that says Citizens Property Insurance Corporation should, like its counterparts in Louisiana and the private market, raise its premiums. First couple graphs. In late August, Florida's Office of Insurance Regulation responded to requests from Citizens Property Insurance to raise its rates for property insurance an average of 13.1% by using an order sending the state's insurance company of last resort back to the drawing board. It must, OIR said in the order, not raise the rates more than 12% in a state where the property insurance market is unraveling in real time, with skyrocketing costs leaving property owners scrambling, bewildered, in some cases uninsured. The capping of how much Citizens could charge was welcome news. Finally, the thinking went, someone put their foot down. But there's a theory, one that is bound to be controversial, that the smart fiscal move would not be to cap Citizens, but for the insurer to raise its rates far beyond the 13.1% asked for. Mr. Gruss, give us a reading of what's going on with insurance and whether or not Citizens needs to raise its rates. Because again, if Citizens were to go bad, the citizens of the state of Florida, i.e. the name, would have to bail it out. So what say you, Mr. Gruss?
Yeah, well, you'll remember Citizens was born after Hurricane Andrew in 1992. So it's been 30 years of insurance stories. And I've covered my share of insurance stories over the years. It's sort of the never-ending story. I mean, Citizens was designed to be the insurer of last resort, which means that it should be charging the highest prices on the markets. It should not be. It should not be the insurer that insures everybody. So right? So the thing is, the theory goes that if Citizens is the insurer of last resort and charges the highest rates, then that will encourage private insurance companies to come into the states and realize that there's a market here that they can do business. Because if you'll recall, after Hurricane Andrew, State Farm, which was the largest home insurer in the state of Florida, picked up and left. So the creation of Citizens was designed to attract private insurance back to the state. And that really never happened because Citizens became a political entity that basically was there to provide cheap insurance for Floridians, or cheaper insurance for Floridians, and keep the real estate machine going. Because as we all know, the business of Florida is real estate. And so Citizens has now become not only the insurer of last resort, but the main insurer in the states, because it can't raise rates to the levels that make it self-sustainable for starters, and also to attract private insurers to the state. I mean, I don't know very many private insurance companies that are clamoring to come write homeowners insurance in Florida. So, I mean, so here we have a problem now, and it's unpalatable politically to raise Citizens rates. Every time they try to raise rates beyond what they, beyond 12%, everybody's screaming and shouting. But that's what needs to happen. It's bitter medicine, and we got to take it. It was interesting to read that Louisiana does not have a cap on rates. And I think, obviously their system is a lot healthier than ours. And, they're just as vulnerable to hurricanes as we are. So yeah, I think that's going to have to happen. But the problem is that it's just unpalatable politically. And then I'm sure the real estate lobby is, hard at work, trying to keep Citizens in business and keep rates cheap, but ultimately we'll all pay the price because as these catastrophes continue to hit the state, we're all going to be on the hook for it.
Mr. Gruss, if insurance rates were to go up by citizens, much like Louisiana, which the story references, if suddenly if it was a premium to be with citizens, obviously, I guess the expectation would private sector would come in and they would be able to undercut the insurer of last resort, which right now it's the opposite. Right now,
Right.
the insurer of last resort is actually the cheapest, which doesn't make a lot of sense. But I'm wondering, if you saw rates with citizens go up, what do you think? What impact would that have on the housing market in terms of supply? There's a real tight supply right now. A lot of the properties are owned by investors and or REITs, groups that aren't living there and declaring a homestead because it's their primary residence. Could you see that impacting the housing supply that would be on the market?
Yeah, I mean, possibly because I mean, insurance rates, even though they may seem high to us now, they're actually artificially depressed. And a lot of people perhaps own properties that they might not otherwise be able to afford because if insurance premiums were set at a competitive or at a market rate, they would be unaffordable. And actually, I think we're starting to see some of that. Some of those, particularly HOA, condo, in the condo market, we're starting to see some people that are grouching about HOA fees that are going up, and of course, wrapped up in those are the insurance premiums that are really rising. Of course, that's due to the Surfside catastrophe. But I mean, certainly, it's going to drive the real estate market, and could possibly boost inventory. I mean, it's hard to tell because, really what are the rates that need to be set to do that? And that's really set by the market. Reinsurance. I was reading recently about catastrophe bonds. These are bonds that are sold to investors to help mitigate the risk of these storms.
Yep.
So, I mean, there are a lot of different variables, and that obviously the real estate market wants to continue to see the real estate industry, I must say, wants to continue to see less expensive rates, of course. And if they're going to do it, if they can do it politically, that's the way they're going to do it.
That's right.
But it's not to our benefits in the long run.